Hi, hi everyone. We are live. This is the Timing Research Show for December 1st, 2014. This is we're going to be discussing the Week 62 report that was published last night. If you have not had a chance to take a look at this yet, just go to TimingResearch.com/reports and you can download it. I've also activated the Q&A app for the show, so if you have any questions for me or any of the guests, just type that in and we'll get to that at the end of the show. And now I'm going to turn it over to my guest host, Dave Landry of DaveLandry.com.
Okay, thank you, David. Thanks for having me host once again. And do I need to mention the report again, where to download it, if you haven't, for those who haven't seen it?
Yeah, just TimingResearch.com/reports.
Okay, fantastic. We have an interesting lineup again this week. We got Michael Filighera of LogicalSignals.com. Sorry about that, Michael. Michael, tell us a little bit about yourself and tell us a little bit about Logical Signals.
Okay. My name is Michael Filighera, and I'm based out in San Francisco, and I have been trading in the markets since 1978. I was a market maker here on the Pacific Exchange for many years. I've also traded in Chicago, New York, London, and Amsterdam. And I started to publish technical analysis of both the U.S. and the European markets in the late 80s. And so I've been doing that. And when I came back to the United States, I continued to trade, of course, and got a lot of requests from people to pick up my writing and the analysis again, which I did, and then I started Logical Signals, which is a website that basically more or less started as a place where I could put my thoughts, so more of a blog, but now it's turned into more of, I discuss my analysis, what my views are on many factors that deal with the markets. And then also in September I started a trade room. So it's a Logical Signals trade room. And that's basically just put together so that other traders have a place where we kind of gather and we share ideas, we share strategies, and we kind of build on each other's thoughts.
Cool. What are the differences between the pit in Amsterdam and the pit in Chicago? Is that a big difference?
Yes. Of course, they were smaller, and also in Europe, the pits in Chicago, of course, are bonds and the futures pits, and the options pits were on the CBOE. But as an options trader, I traded in the broader index, so it was a European options exchange index, and it was very different because while the trading had to be done in English, everything else was in Dutch.
Gotcha.
So you kind of had to pick up several languages so you can follow traders.
That's where you learned the Dutch. Cool. Okay, next up we have Roy Swanson of SteadyTrader.com. Roy, tell us a little bit about yourself and a little bit about your website.
Sure. I've been trading for just under 20 years. I guess that makes me a newbie. And worked in the industry for several years and decided to go out on my own about a year ago with Steady Trader. I've developed a proprietary algorithm that's based on what I call very near-term price pressure. And really, I'm very focused on that type of trading. This is really for very short-term swing traders or really day traders and intraday traders. We don't try to look too far ahead in the market. And for us, a week-long prediction like we're doing today is about as far out as I possibly dare.
Interesting. I agree with you when you can only predict the short term, but I will stay with positions for years if things work out, which I'll talk about in a minute. Well, cool. Neil Batho of TraderReview.net. Neil, tell us a little bit about yourself and your website.
Sure, thanks for having me on the show again. I've been running Trader Review since 2003, and it's basically based off of a lot of the charting that I learned when I was a broker in Denver in 99, 2000. We used to do point and figure charting with some brokers from another office, and we would do seminars and bring people in. And it's an old type of charting. Even before computers, people used to update the charts every day just by hand, but it's so difficult to update a linear chart by hand because you'd have to make a change every day. This type of charting only charts the important moves. So sometimes you have a large consolidation period in a stock. In this type of charting, you don't actually change the chart during those consolidation periods. And there's a lot of massive indicators that put all the charts together. So there's the bullish percent index, which is my main indicator, which gives a percentage 0 to 100 of all the technicals on the S&P 500, the market, the Russell, whatever you want. And I found this to be one of the best indicators that you can use. And so I'll use that in the market and in each sector. And been sending out my reports for 10 years.
Cool. Your camera's drifting higher, FYI.
Whoops.
We just see
I
the
just
top
saw
of
it.
your head. No worries. I like what you were saying about the point figure, because that makes sense, because it takes time out of the equation when you're going through these consolidations and all. That's pretty cool stuff. I've been trading for over 20 years. I've written 3 books and published in, I think, 7 languages or so. And as David mentioned earlier, I'm the owner of Landry.com. Let's go to the questions. Let's start off with Michael. Question number 2, based on any technical or fundamental indicators you want to use, would you guess that the S&P index will move higher or lower next week? And by next week, I mean this week, by Friday's close of December 5th.
I believe that the market will consolidate, so I'm going to say that the market will move lower, but it'll do it in a very steady pace. In other words, I think the market will continue to come down a little bit, rally up, and then finish by moving again lower. I am not looking for a massive sell-off here. I just think a good, healthy pullback is in store.
Okay, so we're going to go with lower, and based on your answer, on a scale of 0 to 10, what's your confidence? 0 being no confidence, 10 being 100% sure.
I would basically probably go with an 8.
An 8. Oh, very good. Very good. Okay, fantastic. Okay, Roy, let's go to you. Based on any technical or fundamental indicators you want to use, would you guess that the S&P index will move higher or lower this week? And that's the week ending, obviously, Friday, December 5th.
Yeah, I'm going to agree that it's going to be just a tiny bit lower. I don't see any big movement. Today is a tiny little bit of a correction, but it's going to come back. I'd be surprised if we're up or down significantly by the end of the week, but I'll put my guess on a little bit lower, and I would also say I'm 80% confident on that.
80%, very good. Okay, Neil, to you, based on any technical fundamental indicators you want to use, would you guess that the S&P index will move higher or lower this week? And that's ending, obviously, Friday, December 5th, close.
Yeah, I think it'll be pretty much the same to a little bit lower, the same as everyone else has been saying, and probably a fairly tight consolidation range, because I think people are scared to be out of the market, to be honest, which could keep it up a little bit, but I would say a little bit to the downside.
Okay, and based on that answer, what's your confidence on a 0 to 10 scale? 0 being least and 10 being 100% sure.
Well, I think if it's going to be down, 50 Dow points to maybe up 10 or 20, such a tight range, it's hard to say. Maybe 50, 60%. Maybe it'll be just a tiny little bit up, but I think a tiny little bit down. So.
Okay. Now we are going to use, we're using S&P as the proxy. So same answer for those. For the S&P 500, same answer.
Yeah, but I'm thinking, I mean, we're mostly just out of the market anyway.
Okay. Okay. As far as my answer, it's been kind of interesting that, as a lot of people have pointed out, this market has not gone down, and it should go down. It should correct. It just keeps going higher. And I was counting this morning, it's 30-something days. Everyone seems to be talking about the 5-day moving average that we've been closing above it for so long. I think it was 31 days or something. And if we close where we are now, we'll actually be below it. I'm going to actually go with higher. I'm going to err on the side of the trend. I think this thing does need to pull back. I think we do pull back this week. But the reason I'm going to guess higher is that it just seems like lately we haven't had much of a pullback, and it seems like people want in. So I'm going to go with higher. And I'm not going to be as confident. I'm going to give myself a confidence rating of about a 6 on that. And I'm thinking, not to play both ends against the middle, but I think it's going to dip first and then rally towards the end of the week. Whether or not that gets us into the plus column, I don't know, and that's why I'm going to give it a 6. But I think that it seems like something is, and this came up quite a bit last week, it just seems like something's propping this market up, and it doesn't want to go down, so we're just trying to follow along. Okay? All right, let's go to Michael next, and the question is going to be, we're going to question 4 now. Oh, I'm sorry, question number 1 on the third page of the report. What developing events, and they could be technical or fundamental, will you be watching out for this week that might have a positive or a negative impact on the S&P 500 and other U.S. markets?
What I found interesting today is when I came on, I noticed that a lot of the other media sources were saying that the markets were selling off due to crude selling off as hard as it did last week on Thursday afternoon, evening, and then Friday, which I found very interesting because the markets paid no attention to that on Friday during that half day. But I have noticed that there are some traders out there who are now looking at it, but not as strong as one would imagine. I think of greater importance is how the market wants to interpret Moody's downgrading of Japan. They downgraded their sovereign debt. I think that is major because I think that the focus is going to be on Japan for a while to see how they deal with the economic problems that they've come up with. I think that China is going to continue to slow down. So I think that the fundamental events that can really be coming into the market right now are going to be from outside of the United States.
Okay.
I think that right now the U.S. retail sales are not coming out as strong, but I think we still yet have got to see how stores and retail report from Black Friday, and then again how all of the online retailers report after today. So I think that could come in as a positive fundamental if those numbers come in showing some strength in the retail sector. So that could help to produce what a lot of people call the Santa Claus rally.
Yeah, isn't it amazing that the market goes down? They blame oil, but then oil turns around, and then they blame something else.
Right.
It's fascinating.
Right.
Okay, Roy, what developing events, and they could be technical or fundamental, will you be watching out for this week ending December 5th, that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Yeah, well, again, I tend to agree with Michael, and also to your point, Dave, about something is keeping this market up, and the trend is clearly up. And I think the trend is up because where else are you going to put your money? I mean, when you look around the world, you mentioned Japan, you mentioned China, and of course what's going on, in Eastern Europe. So I am looking at what's going around the world. I think that the price of crude is a factor. I think the fact that it was dropping was really pushing the markets up. And we've got a couple other interesting things going on this week too, though, with what just happened yesterday with Russia sending another convoy into the Ukraine. That could cause all kinds of just mishigas in the market this week. We'll see about retail. I think that's baked in, even if it's good. The retail effect is so focused on a few key products like flat screen TVs, iPads, and cars. I think it could have a buoyant effect if we have some tremendous numbers, but I don't think we will have a tremendous lift over last year's season. So I don't think there's going to be a huge boost from those reports, although I've been watching them just like everybody else.
Sure, absolutely. Retail's pulling back a little bit today, so as a trend follower, it could be a buying opportunity. I was in Sam's yesterday, and it was nuts. So somebody's buying something somewhere, I guess, from empirical research. Okay, let's hear from who's left. Neil. Neil, what developing events, and they can be technical or fundamental, will you be watching out for this week, ending December 5th, of Friday, obviously, that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Okay, one of the indicators that I use for short-term and long-term trading is something called the percent of stocks above their 50-day moving average or 200-day moving average. And so it'll take every stock in the S&P 500 on a scale and give it a weighting. If it's above the 50-day moving average, it counts. If it's below, it doesn't. And we go from 0 to 100%. And so when this rally started about a month ago, only 15% of stocks in the S&P 500 were above their 50-day moving average. And then that started turning up, and now peaked at 73% just a couple days ago, and then now it's reversed down to 67%. So when this indicator gets above the 70% level, a lot of stocks are above their 50-day moving average, and it's never going to reach 100. It'll always max out at big peaks. About 85% is the highest it ever goes. So this is now reversed down on the point and figure charting more than 6%. So when you have a 6% move the opposite direction, it's starting to form a downtrend. So it's a little bit dangerous now. So for short-term trading, that's dangerous now. And if I look at the 200-day moving average, percent of stocks above that, it was down to 30% when the rally started. Now it's up to 50. It went up to 58%, and now it's down to 56%. So basically what these indicators are telling me is you're a short-term trader, be super careful. You're a longer-term trader, you're a little looser on your stops. You can hang on. But so for short-term trading, I would not be looking at too many long positions at all this week.
Yeah, the overbought nature based on different metrics, and you brought up some interesting ones there too, has just been amazing. Back in '99, do you remember what those indices were reading? I'm sorry, those the metrics you mentioned, like the percent above 50 or percent above 200.
I'd have to go. You can only go back. I'm not sure if I can go back then. I have to change the scale. But
you
another indicator.
Also need a Survivor database too to do that. To get that reading, because a lot of the like Enron is no longer be in the mix and things like that. So
yeah. But short term, not looking good this week at all. Long term, you can hang on.
Okay, and that's a problem that we talked about last week, and I think it even came up the week before, is the lack of reversion to the mean in this market. And all of us have been around the block a time or two. We all understand trends and trend following. Most of us, I think, here are trend followers, but we also believe that markets should revert to the mean, and we just haven't seen any reversion to the mean occur. And I'm against reversion to the mean type of trading, and somebody pointed out that because I'm a pullback trader, I'm trading reversion to the mean in the direction of the trend. So I guess I am a reversion to the mean trader.
You know what? You really can I mention something real quick, because you reminded me of something. Okay, so back when I was a broker in '99, 2000. Harry Dent was huge. Everyone's reading the Roaring 2000s, Dow 40,000. Everyone Dent. And we used to get these reports, and it came in to my desk, and it's this huge. It was the ultimate contrarian indicator I've ever seen in my life, where Dent comes out, he's on top of the world, he thinks he's, going to time the markets forever, and he says, "New Dow channel found." And so he had the normal chart of the Dow. So just imagine going up at a 45-degree angle. Then all of a sudden he sends out this report, wait, now the Dow is going up at an even sharper angle. My bullish forecasts are even greater than they've ever been. and boom, a couple months later, we had a major crash.
Yeah, someone actually gave me that book, and I laughed because, I knew it was a sign. And then what's amazing about Mr. Dent, and I shouldn't take a stab at anyone, but I'm pretty sure he came out with a doom and gloom book in 2009, which
Yeah.
he's a wonderful market timer if you treat him as a contrarian type of guy. Okay, I'm a 100% fundamental trader, pullback guy, so market pulling back this week would be fantastic with me. So I'm not worried about the news or anything. I do like the way that some of you guys, I think it was Michael said earlier, and Roy might have chimed in with him about some of the stuff being baked into the cake, and I think it is. So I'm not going to worry about it anyway. I'd almost like to see the P's, S&P 500 have a bit of a shakeout move, just enough to kind of scare some people out, and I think that would clear the way for it to go higher. I wouldn't like to see it go much below maybe 2025, just a little bit of a pullback in here, and then and I think that would clear the way for it to go higher. So I think we're on question 4 now, and Michael, we'll go back to you. We'll start with you. Is there one thing that you believe is keeping? Well, this is. Let me read the whole question. Is there one thing that you believe is keeping you from becoming successful as a trader, or if you have achieved success like all of us here have, what is the one thing that you think that was pivotal to you becoming successful? So what is the one thing that you think was pivotal to you becoming successful as a trader?
It's very hard to put it together and say one thing. I was talking with Dave just before the show began, and basically my feeling is that all of the problems that I think people have that prevent them from becoming a successful trader or help them to become a successful trader is right here between our ears, and it's what comes out of our brain. And I think that there's some very interesting work being done on the neuropsychology of trading and how our neural pathways really do affect, or our emotions, how they affect us, either taking our losses and letting them run too long, or cutting our nose off to spite our face and taking our profits too quickly. For me, what I think that is real important that has helped me to become a more successful trader in today's market is understanding that the competition is algorithmic computers, and that they run on algorithms. And so to really be competitive against that, you also have to have algorithms that run, and you've got to trust your algorithms, and therefore you've got to trust your signal generators. And then I really run on 4 basic things. One is to trade my strategy, which is an intraday trend strategy. And I have 4 things. I trade no emotions, work the mechanics of the strategy, exercise patience, and accept risk. So if I do all 4 of those things, then I can sit back and allow the trade to come to fruition.
Amen. Well said. Well said.
When you break over one of those things, then it really helps to identify an area where you likely need to work. And online. No. Sorry about that. I was getting asked if I wanted a cup of coffee. If I break out of one of those, then I can identify an area where I can pull up some exercises and work on.
Okay. Yeah, good answer. A lot of good thoughts in that. It's easier said than done, like you said, to do those things and do them well. But if you have, it sounds like you have confidence in your system, and you just have to believe in what you do, and that comes with experience. And it seems like I'm hearing a lot of that from you on that, Michael. Good answer, by the way. Roy, let's hear from you. Is there, or I should say, let's just go with the second part of the question. Was there one thing that was pivotal to you becoming successful as a trader?
Yeah, and I would just pick one of the things that Michael mentioned, and that is basically relying on computer software, however you want to say it, algorithms, data, but not. Hold on a second, I got a call. Not relying on interpretation. In other words, when you figure out a signal or a chart or whatever the data is that you like, you just have to use it and trade it. It's when you start interpreting it on a daily basis that you get into trouble. So again, either your signal works for you and you use it, or if it doesn't, find a new one. But it's just like again, like what Michael said, we're all trading against computers. So you know, and the guy with the best computer wins. So either you got a good computer, and that's obviously a catch-all phrase for algorithms or whatever signal system you use. But either you've got one you can trust and you can use, or you don't. So that's my take on it.
Okay, Neil, is there one thing that you think was pivotal to you becoming successful as a trader?
I think it's knowing where you are in the trend. You know, so I mean, if you see a sector that's, you know, turning around, it looks like it's moving, everything's lining up. Let's say, for example, if oil starts to turn around now, we're looking at all sorts of signals, it's bottomed out quite a lot. Where are we in the trend? You know, if you break the trend, it's a new positive trend, makes a triple buy signal, pulls back a little bit. You look at something like that, you say, we're at the beginning of a big rebound type trend. How far do I think this can go? So you get your first move, a little bit of a sell-off. Sometimes they'll fake you out by breaking a double bottom to shake out all the novice traders. You get another move up, and you have to know where you are in these types of things. Sometimes you could be near the end of the trend. I've written some of my members before. I'd say, look, this stock has already had 2 pullbacks. We're getting close to resistance from a couple years ago. I think this is the last move. I don't want much of a pullback on this. It's going to be a shorter term trade. So trying to figure out where we are in the trend, in the sector, in the stock, and sticking to stocks with high strength, stocks that have outperformed the market for several months or even several years. These types of stocks can hold up a lot better when the market breaks down, and then surprisingly, when the market rallies, they can actually rally better than looking for the bottom fishing, thinking, you know, hey, the stock's down 70%, I think it's going to really rally. So knowing where you are in the trend and sticking with the stronger names. Yeah,
and that's amazing that sometimes you're I follow these momentum lists. I track momentum lists, my personal list of 100 stocks, and I add them in when they're at new highs, and I'm not necessarily buying them personally, but I'm amazed at how many times that I'll put something in at a new high, and it'll go up another 100%, maybe 200%. It's just pretty amazing that strength. Looks like your trend in your webcam is generally up. Looks like it's keeps moving up on you. I'm going to answer both sides of this question. I do have a sizable retail business, and I have the luxury of working with a lot of individuals. And whenever I work with someone one-on-one, I immediately think, how am I going to fix this person, and how am I going to figure out what they're doing wrong? And I ask them, and 9 out of 10 times they tell me what they're doing wrong. And they know what they're doing wrong, but they're doing it anyway. So again, I think it was Michael said it's you know, it's years, between years. So that's the first thing. The second part of that is so far with everyone I've worked with, when they don't know what they're doing wrong, and I use this one example all the time. It's one client sends me all his records. I go through them all, and I compare them to what my signals were compared to what he did. And he did take my signals, and he was slightly profitable with the signals. Didn't set the world on fire, but it was over a 3-month period. And he was only modestly profitable in that period, which is about what we were doing too. The market was a little choppy, a little sideways. But he took about 20 day trades in one particular stock, which created a $5,000 loss in his account over those few months. And when I called him up and says, okay, look, I went through everything. Looks like you'd have been slightly profitable if you'd have just taken the signals, but these signals where you went off and day traded these 20-something trades generated a $5,000 loss. And he immediately said, I know. So he knew what he was doing wrong, and I think most people know what they were doing wrong. As far as my success, I think it's 2 things. I used to do a lot of mechanical testing, and nothing against the mechanical side of the business, but I did enough of that to decide that I wanted to be a discretionary trader. And I ran in the house one night to tell my wife about whatever system, and she would always listen patiently and pretend to be interested. And one night she said, well, how many systems do you really need? And that it just hit me. You just need one. You need to find something simple and stick with it. I think the pivotal point is when you begin to plan that trade, and you guys have touched, each one of you sort of touched upon it a little bit. You plan that trade, you trust your signal, you plan the trade, and you trade your plan. It seems like one of the biggest mistakes I see, and that's the advantage I have in having a retail business, is people put on trades and then they have a plan in place, and then 5 minutes later they're hopping out of the trade when they should be staying in that trade for weeks, months, and even years, but they're micromanaging themselves out. So number one, I think you know what you're doing wrong, and then just don't do it is probably the answer to that. Okay. Now, one thing, anyone here, two things. One, if anyone has any comments or suggestions, David will mention where to contact Timing Research for that. And then the other thing is, have any questions come in during the show, David?
No questions so far.
Okay, cool. Okay, I think that's it. Let's go ahead and, Michael, give us some closing thoughts about you, the markets, and logicalsignals.com, and then we'll go to Roy and Neil. So, Michael, you first.
Okay, thank you. First of all, thanks for having me back today. My thoughts on the market is that we are in a very, very long-term bull market, but we're in the finishing stages of that bull market. And I think that we continue to be controlled by what I put at the top of the food chain, and that is interest rates. And I think until we really see some significant changes within the interest rate sector, we're going to continue to see that hunt for yield, which I think you mentioned. The traders really have to go out, and particularly fund managers, they've got to go out and they've got to find yield. They've got to outdo what interest rate could possibly be, they could get on that type of money.
And as long as that benchmark keeps moving higher, they've got to continue to chase it.
That's correct. That's correct. And that produces a lot of self-fulfilling prophecy in terms of a market moving higher. I have adopted a little bit of a different strategy. My strategy is basically I do not trade anything outside of a day. I have options positions on, which I can do and keep on for an average of between 45 and 60 days, but those are all based on volatility. So I no longer am taking a shot on a directional move. So I deal in probabilities and I deal in statistics when I'm trading options, and that's on premium and volatility. Within the markets themselves, I use an intraday trend trading strategy that I've developed, and that's using two different algorithms that I've combined. And from that, I have also opened up the Logical Signals trading room, and that's where, again, I've limited to a maximum of 50 members because I think once we get above that, it gets a little bit too out of hand. And what we're looking for is other traders that are coming in that also are willing to share their strategies, to share their wins, their losses, and how we improve on one another's trading. And so that's really kind of what I'm doing right now. And I'm real glad to see the volatility kind of come back into the markets today.
Amen. Okay, Roy, any closing thoughts? And tell us a little bit more about SteadyTrader.com. Roy, can you hear us? Okay, let's move on to. We'll come back to Roy. Let's go to Neil.
Hey, yeah, I'm back. Sorry.
Okay, no worries. Okay, we're back to Roy with SteadyTrader.com.
Yeah, I was doing a little multitasking. We did get the report from the National Retailers Association apparently this morning, and Black Friday's down 11% from last year. Ooh. So they're projecting a 6% fall off from last year's Christmas season. So looks like we're not going to get that tailwind. Anyway, and back to my other comments about the international scene probably dominating in terms of events. Like Michael, I'm really on a short-term focus. Yeah, the correction is coming. Of course, it's always coming. I think that, on the other hand, as I said before, it's the only game in town. Where else can you put your money? So if you're looking for yield, that's what's keeping this thing going. I do think we're going to be in the bull market for at least 6 more months. Interest rates, the change there is obviously a huge sea change. Now, it's hard to say when and if they're ever going to do that because we've been on almost 0% interest rates from the Fed for so long. Who knows if they could ever take the pain to move off that. But anyway, I do keep a very short time frame because, as we all know, you never see the correction coming. So my motto is get in and get out. Get in and get out continuously because, again, everyone talks about the correction after it hits, and everyone talks about the crash after it hits.
Yeah.
So you can see more about my algorithms. I use all sorts of double algorithm. It's at Steady Trader. It's called Green Light Trades, but you can learn more about it at SteadyTrader.com. We're doing between 80 and 90% winners, so it's I'm happy with how I'm doing in the current market.
Okay, cool.
But taking base hits. As the manager of any baseball team says, the guy who makes the base hits wins the game.
Gotcha. I'm a little bit opposite of that because I like to position myself for the occasional home run, which is important, which I'll explain in 1 second. Let's hear from you, Neil. Tell us a little bit more about your work and tell us a little bit more about TraderReview.net or any closing thoughts, too. Anything you want to add, throw in?
Sure. I just wanted to say to a lot of the traders out there to be really careful bottom fishing, because I talk to a lot of people that I know, a lot of traders. They'll see an obvious negative trend. It's forming, breaks down, rallies up to the resistance, and this entire time they're always watching it, saying, where am I going to buy? Where am I going to buy? Keeps going down. Where am I going to buy? Maybe I'll buy here. And if a stock is down, 50%, that stock can still go down 30% more. And it's really you kind of got to do the opposite strategy of if things are breaking down, try to go short with an inverse ETF. Don't short the rallies. Go with the trends. That's really the thing that I've seen with so many people, especially novice traders, saying, I'm really going to get an awesome deal. I've seen this stock. It's come down from 90, and now it's at 50. That stock can bottom at 20 or 10 or 5 or 2.
Yeah, I couldn't agree more. I saw a lot of clients emailing me, or several clients, and they were buying gold stocks like 2 weeks ago. And the market is just such a bad teacher just because they had a tiny little bounce. And one guy had caught a pretty big move in one of them, and I think that's probably one of the worst lessons he could have ever had from the market is to buy those bottoms like that. Okay, any closing thoughts on TraderReview.net? Anything you want to talk about your website? Say about your website there, Neil?
Yeah, sure. I send out free commentary several times a week, and one of the things we do is teach about position sizing as well. So I think a lot of people, they often have too big of a position and too close a stop, and what can happen is you're correct on the trade and you keep getting stopped over and over again in the same direction that you wanted the trade to be in. So we do some work that'll help you with that to get the right amount of the position size and the stop in the right place as well.
Amen. I've fixed a lot of people. Didn't make any money off of them, but I fixed a lot of people. Simply they'll email me. I've been stopped out 20-something times in a row. It's like either your stock picking is bad or your stops are too tight, so loosen your stops. And a lot of people have become profitable just by that one little thing. Everybody preaches tight stops, but the reality is you got to give them a little bit of room if they're going to move. Well, good. Interesting comments from everyone, in fact, today. As far as I'm concerned, I think you can only predict the short term when it comes to markets. My time horizon is usually over the next few days. However, through trailing stops and loosening of those trailing stops, I'm willing to stay with the position as long as it moves in my favor. To those who are viewing us today, I have a free newsletter. I put out information. It's a daily, I hate to use the word blog, but it's sort of a blog. I talk about what's going on in the markets, any lessons. I also have some paid services, but that can be found at DaveLandry.com. And I have a 21-page report on my methodology, so if anybody is interested in that, shoot me an email at dave@davelandry.com. I want to thank you guys for attending, and I'll turn it over to David Kosmider, and he'll wrap things up. And thanks again to you, David Kosmider, and to Timing Research for having me come back as host again this week.
All right. Yeah, thanks, guys. Good show. Just want to mention that for everyone watching, please go to TimingResearch.com/current survey sometime before this coming Sunday to fill out the current survey. And I want to thank all my guests, Neil Batho of TraderReview.net, Roy Swanson of SteadyTrader.com, Michael Filighera of LogicalSignals.com, and my guest host again for how many weeks is this now? About 5, 6?
About 5 weeks, yeah.
Dave Landry of DaveLandry.com. My name's David Cosmeter. I'm the creator of Timing Research, and that's our show. So thanks for watching.
Thank you.
Thanks, David.
Thanks, David.